Welcome back to the ET Money Show. Let's keep it going with our third segment, wherein single-digit KYC across all financial instruments may become a reality soon. Now, recently, the Finance Ministry held a meeting of Financial Stability and Development Council, that is FSDC, in which it has asked SEBI, RBI, PFRDA and IRDAI to simplify and streamline the KYC framework. What will it mean for the investors and what exactly will change going ahead? Let's answer all these questions with Harshvardhan Rungta, CFP of Rungta Securities. Hi, very good evening, Harsh. Pleasure having you again on the channel. Firstly, just wanted to take your take on why this process is really needed. As per you, what's your take? What exactly is something that is missing in the current process of KYC?
Hi, Shrishti. It's always a pleasure to be on this show. Well, to answer your query as to why and what is this whole thing about single KYC being accepted across different market participants. So an investor goes to one particular intermediary registered with, say, probably SEBI, goes and wants to open a broking account, a demat account, or mutual funds, and submits KYC documents to one organization. So gives all the documents that are required to probably a depository participant to open a demat account. Now, when you give those documents, and then when you go back to start investing in mutual funds, what happens in that case is that you had to earlier give your documents all over again. Now, this thing has kind of been sorted out because the KYC can be used across different market participants under same regulator. So take, for instance, SEBI. Now, if you are opening a broking account and you've given all your KYC documents, ideally, your document, you are supposed to get a CKYC number as well, which is a 14-digit number, which is given to you by SERSAI. That's the supreme body governing all the KRAs, the KYC registration agencies. Now, as an individual, I can use that 14-digit number and go to another market participant and give that KYC number to say, like, look, hey, my KYC has been done. I don't require to give you all the details all over again. You simply use this number and fetch my details from the SERSAI and use this for updating the KYC in your records. Now, this ideally is the function where I don't need to keep going and giving my documents to different organizations. However, banks and insurance companies are yet to upload or share the details with this central database, wherein it can be smoothly, as I as an individual then go to buy an insurance policy, I'm supposed to submit all my documents all over again. So the finance ministry has tried to streamline this to say, look, an individual should not be required to submit his documents every time he goes to different organizations. Simply use one centralized database and keep downloading that information and use it for updating the KYC. Now, what is happening, unfortunately, and there is this gap that you're talking about, that why is it not being implemented effectively and efficiently all across? As I said, the 14-digit number that is given, I go to another market participant and I say that, look, use this information and pull my KYC details from the central database and update it in your records. Now, what one part of the regulation state is that this particular organization where I'm going and submitting my number has to verify whether that information that is uploaded on the central database is the latest one. Now, if that organization has to verify it's the latest one, they're going to still ask me to submit my latest document. So it kind of defeats that purpose. So, well, I believe that the new system that the FM is trying to emphasize upon, saying that you use a Digi Locker, you use the Aadhaar-based authentication method, will weed out this inefficiency in the system, and they're trying to rope in the PFRDA, RBI, the IRDA, SEBI, all the different market regulators to say that this has to be interoperatively used across all these segments of the capital market and not only all those intermediaries registered with SEBI or RBI individually. So I'm very hopeful that now that the attention is there, a very focused manner on this particular matter, there could be a system wherein we all, you and me, you and I and all of us will be relieved of this burden of submitting our KYC documents all over again, all the time to different organizations.
Absolutely, because it actually gets quite cumbersome and tiring when you have to fill in the same details on various other platforms. But you did touch upon the Digi Locker thing, that was also a very brilliant concept, but it didn't gain that momentum, Harsh, because what we are seeing right now is that not many people are currently using the Digi Locker. With the implementation of such KYC process, do you believe that the Digi Locker will also gain momentum, and how can this be simplified when we have the Digi Locker in place as well? What's your take?
So yes, it's I know what the government can do. So let's understand two parts: what the government can do and what we need to do. So the government is trying to emphasize upon making it very smooth for individuals to use DigiLocker, the documents that are there authenticated with the PIN that you have in DigiLocker when you do your KYCs onto any platform. Now the question is that if I don't download as an individual, I don't download my DigiLocker, I don't download my documents in the DigiLocker, I don't think anybody can help us. So essentially, it is for us to decide as well. The systems can be in place, but how efficiently do I want to take the benefit of the system? So if I want to take the benefit of this digitalization and want to, become totally paper-free digital, KYC kind of a process, I will need to take the effort of downloading a DigiLocker, downloading a documents and keeping them in my DigiLocker, so that as and when required, I can simply and very quickly fulfill my KYC requirements. So, well, I think the onus will also be on the individuals. However, having said this, I think the bigger issue lies in the acceptability of the responsibility on the part of the intermediary. So, as I said, there is one clause which says that the intermediary has to verify that the data that is there on the central database of the investor is the latest one. Now, hypothetically, assume a situation, you come to me and you say that, okay, hey, look, take my 14-digit CKYC number and fetch my details from the central KYC database. Now, I am going to Srishti ask you that is this the latest database? And it's my responsibility to verify that. But so in order to verify that, I'm going to ask you for your documents. Now, if you have to submit that document to me, because I need to verify it's the latest one or not, then right. So that is exactly what there has to be some, something has to be, put through in this system, which kind of recognizes that we need to use the central database. It's the responsibility of the investor to update the central database with the latest information and not put that burden on the intermediary to confirm at every point in time whether the database is latest or not. So I think there has to be some paradigm shift over there in terms of whose responsibility it is to ensure that the data on the central database is the latest one or not.
And totally take your point that it's the onus not just for the government as well as the individual to keep updating their information when this process is in place. But Harsh, all this is still in the recommendation process, and I was just reading that an interesting point what the FM has highlighted, that the regulators, what all regulators that are mentioned in this recommendation, they should conduct a special drive to facilitate the settlement of unclaimed deposits and claims in the financial sector across all segments. Now, such as banking deposits, shares, as well as dividend, mutual funds, insurance, etc. So, with this process, do you feel that a lot of unclaimed amount that is still there? Because even I know a lot of people who don't know that how much money is parked in which particular asset class, maybe something that they must have inherited, or at one point in time they just simply forgot after investing in that asset class. So will this process streamline and help them get back this money as well, and then the individuals should take the efforts to update their information to get all these things processed in place?
Yes, Rishi. So in fact, this has become a perennial problem wherein large sums of money is lying unclaimed. Okay, so the estimated numbers is about 35,000 crores across different, across the banks, mutual funds, insurance companies, etc. So this is by no means a very small amount. I mean, 35,000 crores. It could be of people who are of course deceased and the nominees are not aware of this, or it could be any other form that they've just simply forgotten about it. So updating your KYC will at least ensure that there is some name to that unclaimed deposit. Okay, because there will be some document which will link the deposit. So it could be a PAN probably. It could be some kind of, so there is some documentation that is associated with a particular deposit. And that can be easily identified when the KYC data gets updated all across. So yes, the emphasis is definitely on ensuring that people get their money back. And in fact, I was reading some reports where they also mentioned that the FM has set a target saying that 100 claims in 100 days. So every regulator, every bank, every branch has been mandated with saying that you will settle and you will identify and find out the whereabouts of the depositors, and you should target about 100 such claims to be given in 100 days. So I think the intent is very clear, and it's good that there is some this kind of intent behind unclaimed deposits. And I'm sure the banks, insurance companies, mutual funds, etc., will take the effort because there is some mandate on to them now to at least, and I'm sure they will be evaluated as to what efforts have they put after 100 days, and there would be some kind of incentives or some kind of rewards or awards given to them for having accomplished that kind of targets. So yes, the concerns are large. KYC is a very, very important and effective methodology to identify those kind of people. And I think, and I'm hopeful that this exercise turns effective and not just on paper as it has been till now. And it's actually been implemented and accepted by banks and insurance companies more particularly. The entities under SEBI are pretty much, accepted this kind of a KYC, and it's pretty easy to move around within SEBI. All the entities regulated by SEBI, but banks and insurance companies have taken some time to come on this
Yeah.
platform. If they do come, it will be great.
Well, yes, and the whole process, I feel that when this is in place, that will be great. Thank you so much, Harsh, for that discussion. But please hang on, we'll be taking the viewer queries with you, because there are a plethora of funds that are available in the market, but where you should invest your money, that's the big question. And how do you assess which is the right fund in your portfolio? In the show, we give you an opportunity to connect directly with the experts and get an advice from them. Let's keep it going. And the first caller that I have today, Harsh, is from Mumbai, and his name is Rajiv Bhargava. Hi, Rajiv. A very good evening to you. Sorry to keep you waiting. Please go on. Harsh Rumta is here with us, and he will help you with your investment.
I have a query. I have invested in an Axis Flexi Cap fund around 1.5 years back, and the performance of the fund has been very, very poor. I am in the negative 10%. So what should I do? Should I hold it or should I redeem it?
Okay, Harsh, you heard his query. It's been 1.5 years. He invested in Axis Flexi Cap and got poor returns out of it. So how do you see the fund performance going ahead? And at this point in time, how should he place himself?
So, Shishti, I kind of agree that the Axis Flexi Cap has been underperforming its peers very clearly. I mean, there has been underperformance when compared to the peers. When we look at the performance with the benchmark over a medium to long term, it's not that bad. However, of course, there is a case for him to make a switch concerning, because the outperformance of the peers is really, really huge. I mean, it's not just a small margin by which they're underperforming. There is a reasonable good amount of difference in their performance and the peer group. So I recommend that he could make the switch right now to either the Parag Parikh FlexiCap or Canara Robeco FlexiCap. So yes, move out of Axis FlexiCap and move either of the two. It could be the Parag Parikh FlexiCap or the Canara FlexiCap. You need not take both, just take any one.
Okay, so Rajiv, those are the recommendations, because Rajiv, that is the the query that has been answered. Do you have any more queries for Harsh?
I have another fund, UTI Flexi Cap. That is also not performing well. So what should I do for that as well?
Okay, Harsh.
UTI is fine. I mean, I don't think you need to make any changes to the UTI Flexi Cap. That has been doing reasonably well. In fact, now that you mentioned that you also have UTI Flexi Cap, there is a case to consider that if you are winding up from Axis Flexi Cap, instead of adding another one, which is a Parag Parikh or Canara, you could also consider just topping it up into your UTI Flexi Cap. So you don't need to have many more funds. Just add it into UTI and that could be good enough.
Okay, so that's the advice coming in for Rajiv. Hope you invest as per suggested, and happy investing. But moving on to the next query. Harsh, the query is coming from Suresh, and he says that he has 20 lakhs in PPF, 50 lakhs in PF, and traditional investments like LIC. Now he wants to start equity SIP, which fund to invest, which can actually give good pension for his retirement, and he can save 50,000 per month. So what will be your advice?
Srishti, my only concern is the number of years to his retirement is not known to us. So he just mentioned that he needs to invest for retirement, but there is no information as to how many number of years. Nevertheless, I'm assuming that he has a 10 years minimum to retirement, and if that is the case, he could look at investing into equities. Now, obviously looking at the existing portfolio, which consists only of debt. So he has only PPF and his PF corpus. So definitely there is a case. If it's a 10-year horizon at least, he can put into equities. Now, I can suggest certain schemes now, which could be 10,000 each into the following five schemes: ABSL Nifty 50 Equal Weight Index Fund, the Parag Parikh Flexi Cap, Canara Robeco Emerging Equity, Tata Multi-Asset Opportunity Fund, and ICICI Multi-Cap Fund. On these five funds, he could choose and invest 10,000 every month via SIP, of course. And the corpus that he accumulates at the end of the period, he could use that to buy an annuity plan if he wants pension particularly. He could just put that money into a fixed deposit and earn interest on that, or he could use an SWP method to fund his retirement. So that depends exactly on what he will prefer at the time of retirement. In case his time horizon is less than 10 years, then of course I would not suggest the portfolio as I have suggested right now, but there could be some changes he would need to make. So if it's less than 10 years, I request him to post his query again. So probably we could make some changes into this.
Okay, moving on to the third query, that is once again an email query that I have, Harsh, and this query is from Kishore, and he says that he has invested in L&T Opportunities Fund, and now it has become, the name is HSBC Small Cap Fund. That's a regular growth where the SIP amount is 2,000 per month. For the last 60 months, he has been investing there. So now it has become 2.32 lakhs and the NAV is 51.18 paisa. Whether he should continue or sell off as his profit is around 79% in this one. He's in need of some money for paying off his housing loans. So will that be a good strategy?
In fact, yes. I mean, look at the handsome profits that he's sitting on already, and he needs the money for paying off a loan, and he wants to pay the loan. So there is no question on that. So most certainly, yes, Kishore should redeem out of his mutual fund investments now and pay off your housing loan. I don't think there is any two doubts on that or any thought to be given further on this.
That's the advice coming in for Kishore. But thank you so much, Harsh, for joining us today on ET Now and helping all our viewers with their portfolio-related queries. But with this, viewers, it's time to wrap this edition. It's a goodbye from me and the entire team who put this show together. Thank you so much for watching.